And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And good morning, welcome to the show. It's Tuesday, of course. That means John Penn's here to talk a little bit about two dads on money this morning. Got to talk a little bit about 401k plans and a few other things. So we'll get into that this morning. Kind of the earnings news continuing to roll in this morning. Procter & Gamble announcing earnings today. Some changes at the top with the CEO being basically getting a new CEO. So stock's going to be up a little bit on that news this morning. Union Pacific buying Norfolk Railroad as well for $85 billion. So again, we're having more consolidation in the railroad space. And kind of other news outside of that is just, we're just in that middle of earnings season right now. So we're just getting a lot of earnings reports right now. Again, beat rates are very high right now. And markets are doing okay. In fact, markets were down a little bit yesterday afternoon, but rallied back at the end of the day, finished back into positive territory. As we noted yesterday, we've had a very long stretch of the market being above the 20-day moving average. So again, the bullish market's very much intact right now. In fact, Wall Street analysts are now getting very bullish. This morning, a new target was put on the S&P 500 for year end of 7,100, right? So that's the new high water mark for the S&P by end of the year. A lot of other analysts around 6,600, 6,700 by the end of the year. But that would be an 11% advance from where we are currently and the third 20% plus return year in a row for the markets. So again, optimism is high everywhere you look around the markets. Speculation is elevated at this point. Everybody's, but why not, right? I mean, I saw a Facebook post yesterday. It's like, I'm quitting my job. I'm going to be a day trader. You know, it just, that is where we are in this cycle. You know, we see this every single time this occurs, but every time it's different this time for a variety of reasons, and that's always the belief. But again, you know, the markets are doing fine. They're very bullish. And there's a lot of headlines out there. I saw a whole article out yesterday talking about the dollar and the debt and the deficits, and markets don't care. Saw another article out yesterday on tariffs, right? And how, you know, the tariff impact is still coming. It's not over yet. But the markets don't care. Economics don't care. In fact, GDP now has round tripped. And we're now back to almost about 2.5% growth for GDP this quarter. So again, expectations are very optimistic. The data continues to support those expectations, at least for right now. And that's kind of been the driver of the markets here as of late. So again, you know, there's a lot of concern, a lot of negativity, and when things are doing well in the markets, we're always kind of looking for that shoe to drop, right? It's like, okay, this is going to end, and yes, it will end at some point. I got an email this morning. President Trump is moving up the deadline for Russia to do something, in negotiating with Ukraine, or they're going to put a lot of sanctions on Russia. Could that be the trigger for the markets? Probably not. I mean, if you look at all the stuff that's going on, whether it was tariffs or debt or deficits or all these other things, it hasn't triggered the markets as of late. And again, those headlines are going to, markets are going to look through that headline pretty quickly and say, okay, great. You know, they're going to put sanctions on Russia. What does that have to do with earnings for NVIDIA? And we've talked about this before, is that, you know, you take a look at stocks like Caterpillar, boring old construction company, right? Makes tractors, heavy equipment. Stock is doing fantastic. Why? Because it's all about artificial intelligence, infrastructure build out. In fact, just yesterday, several utility companies have announced that they're going to be spending up to $1.1 trillion in infrastructure development between now and 2030, over the next 5 years. $1.1 trillion. That has about a 3 times multiple in the economy. That's a $4 trillion boost to economic activity over the course of the next 5 years. So again, now all this, so remember all those dire predictions about how the economy was going to take because of the debts and deficits, and we wrote an article talking about how AI infrastructure build out could add to economic activity. And now we're starting to see that action, right? We've talked about this before. So, but now you're starting to see that come to fruition because it has to be done. You cannot build data centers without improving the external electrical grid to supply the power. The power demands are going to be so enormous at this point that it has to create economic activity, and that provides an ability for us to grow our way out of some of these debt problems over time. So again, this is why you have to always be careful about these long-term projections from things that you hear is like, it's doom and gloom and this is that, because the economy is dynamic. It's changing all the time. Things are changing, new innovations, new developments, and that leads to economic growth and activity. And right now, that's kind of what we're seeing the beginnings of. We're very early in this. So let's talk a little bit about the markets yesterday. Here's what you need to know before the bell. The market did, again, intraday, kind of sold off a bit, rallied back at the end of the day to finish up positive, another positive print. We've had 6 days in a row where the market's been positive. This morning, kind of on the announcement of trade deals and other things with the administration, futures are pointing up about 28 bips on the S&P, so potentially another positive. We'll see. We've seen these days where we open up positive and then sell off. But again, we've had 6 days in a row. If we have another updated day, that'll be 7. That's getting to be a very long stretch of positive days in a row. So you're going to get a down day here, this week probably at some point. But the question is whether or not we're going to cross below that 20-day moving average. As we noted yesterday, we've got a very, very long stretch of the market just running right along the top of that 20-day moving average and not breaking it. So again, that's been the running kind of trend line for the markets, that deviation from the 20 days starting to get fairly elevated. So a pullback, to around 62.60 right now would not be surprising at all. If you do crack that, and we will crack that 20-day moving average at some point, then they're going to start looking at the 50-day moving average right around 60.80, and then below that's the 200 58.70. So there is some downside risk here to the markets, and again, this is what we've talked about recently. Just kind of take some profits, rebalance risk, those type of things. But moving and looking at different areas of the world here real quick, emerging markets continuing to do okay. It popped up here recently. It's been trading more sideways than up relative to the S&P. So a lot of that early kind of stage advance that we saw in emerging markets has been kind of tempered as of late. S&P has been growing a little bit faster here over the course of the last couple of weeks, and we're starting to see that money flow coming back into the markets. And we had talked about before that when you start to see money flows back into U.S. stocks, remember that whole narrative where the loss of U.S. exceptionalism and nobody wants to invest in the U.S. anymore, and we said that would change as soon as markets rallied. Well, now we're seeing those money flows come back into the U.S. And so you're starting to see, things that were catching those money flows starting to lag, like emerging markets. And another one is gold, which was doing very, very well when money flows were kind of chasing outside assets, and also as the dollar was depreciating. They were looking for an alternative to store reserve currency, so they were buying gold, but gold's not really gone much of anywhere as of late, as we're starting to see money move back into U.S. equities because of just, again, that's where the appreciation is. And so money flows are always looking for where they're getting appreciation. And then also, if I'm an international investor, I've also got to offset currency depreciation or currency fluctuations. And so I'm looking for an asset that's holding up in that environment. Right now, stocks are doing that trick very well. And so the more that this continues to go up, the more money flow it pulls back into it that continues to kind of support that type of rally. But as we noted yesterday, we're starting to see some exhaustion in this current move. It doesn't mean the move is going to end abruptly and it's going to be a major crash or anything like that. But we are starting to see some more exhaustion in this move. But markets are still very, very overbought on a relative basis, momentum basis as well. Very overbought, very, kind of really extended here. So again, just, this doesn't mean sell everything and go to cash, but this is, as we've talked about, kind of look at your portfolio and see things that are really kind of out of balance relative to, target weightings in your portfolio, those type of things, and just make some adjustments. Again, we're going to see a rotation here at some point. Just determining the time frame of that to happen is just very, very difficult. Well, it's actually impossible to do with, perfect timing all the time. But this is why we just have to kind of pay attention to what's going on. But that's what you need to know before the bell this morning, and we'll come back, pick up with John Penn, talk a little bit about 401k plans and some other stuff for Two Dads on Money this morning. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. Realinvestmentadvice.com.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
The Real Investment Show.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. John Penn joining me as well. I tell you, it's been, I'm very tired. I'm very sleepy this morning.
Tuesday morning came really fast.
It really, I have an ongoing. So I have two dogs. One's about 3 years old and one's about 12. And so the 12-year-old I have an ongoing bet with right now, and it's unlimited dog treats for a year. and the bet is who stops waking up first.
Okay.
Whoever stops waking up first loses the bet. So he and I are both getting pretty old now. So every morning I wake up and go, hey, you woke up this morning. We're in good shape. So
You get a dog treat.
he gets a dog treat. Yeah, he's getting to the point now. It's like, we used to keep our dogs on really strict diets. So I'm like, hey, honey, just have whatever you want.
Yeah.
Just
Have a treat. Have a bowl of treats.
Whatever you want. So anyway, but yeah, we both woke up this morning. So it was a good morning. But I am feeling, I'm just feeling it this morning. I'm just tired.
It's two dads on money. It's dad talk. I'm like a bowl of Rice Krispies. I snap, crackle, and pop every morning. More and more every morning when I wake up.
I tell you, it is something. As we go, there was a very interesting article out this morning that kind of wanted to tie into, talking about college graduation and kind of what to expect out of your career a bit and some of the things to do. So as you graduate college and start kind of moving out to the world, there's some, and I'm having this conversation a lot with my daughter right now.
Yeah.
And it's a very, and this is the challenge, right? It's, trying to do all the right things monetarily up front because there's all these pressures, to do, from kind of society in general, from social media and everything else. So like buy, you're just constantly inundated with social media about buy this, buy that, do this other thing, and it's like, but if I need to save money as well, and so that's kind of the hard part. So we're having this conversation a lot, and I want to share this chart with you real quick here if I can get it to come up. There's this chart is also kind of humorous. These are the jobs that are most likely and least likely to be displaced by AI in the future. And this is the near future. This is what's coming. The things like proofreaders, credit analysts, ushers and attendees, technical writers, telemarketers, billing clerks, very kind of repetitive task. are going to be easily replaced by AI. Now, the good news, John, is that the financial services are on the list of the least likely to be replaced. But I will tell you this, because we're in-house right now doing a massive amount of AI development for financial services, there's going to be...
Should I be concerned right now? Is that what you're saying? I'm going to break this to you on the air, John.
I'm going to break, on the air, John. I hate to tell you this.
So I've been meaning to talk to you about this.
But there's a lot of stuff in financial services that are going to be easily replaced by AI, and that's just the fact of life. So as you're moving out, as you're going through college, or if you're young and about to go to college, you need to really think about what you're going to major in. And what is the likelihood of that job being displaced by AI? Just as an interesting comment, a statement about this, there was two guys just raised $1.6 billion. This was announced yesterday. They've got a startup that will now do basically psychological services online. So if you need mental health help, right, whatever, you need to talk to a therapist. It's all AI driven. It's a chatbot situation, but it basically accumulates the AI just accumulates all the known knowledge of therapy, and you can go online and have a talk with a AI therapist. And so again, there aren't jobs that are 100% safe from AI, except jobs like being an electrician, but even those are susceptible, right? Because once we get robots that have artificial intelligence, they'll be able to do some electrical work. But there is no job that is absolutely 100% safe from the intrusion of AI and what's going to happen in the future. And so as you're going through college, you need to really think about what it is that you're getting a skill set in, and how that's going to be, what's the risk of that job even being available for you in a few years.
Yeah, because I think, excuse me, yeah, and so I'm having these conversations with our kids as well, right? Our oldest daughter's been out of school now for about 2 years. She'll be 25 in October. Our youngest daughter just turned 23 this past week. She graduates school actually this upcoming fall, and just starting to think about, for our youngest especially, who's going to be leaving college and getting into her first post-college career, is, what are you interested in? It's kind of, they're just trying to cross the finish line. Like they're just trying to get out of school. And it's like, well, then, I want to get into my first post-college career. But you're right. You got to start thinking a little bit down the road here, because, AI is kind of, it's really been a game changer. And, are those professions that you're going into, will they be completely replaced, or how can you maybe embrace AI to enhance that? Because, even you were talking about, hey, there's an art about being able to work with your hands. Welders, electricians, plumbers, those are skilled professions.
And there's just going to be a huge demand for them.
And there's a huge demand for them because the generation that is that are in those skilled professions now, they're getting older. Right. And, so you need that younger generation to come in and replace, and that'll also lead to some enhancements in that skilled profession as well. Jonathan and I last week, we were just talking about, look, a lot of kids now, as they're coming up out of high school and they're looking at, that next level of education, those kids are already starting to weigh the cost of, well, what does a 4-year college degree cost, or private school compared to, going to get trained in a skilled profession.
And the one thing is, like, and when we were growing up, when John and I were growing up, and more so when I was growing up, because I'm a lot older than John. Back in the Depression era, there was a lot of need for skilled workers, and when you went to high school, or even actually in intermediate school, we had shop classes. I learned to weld when I was in 7th grade. I learned, woodworking in the 8th grade. And, when I got into high school, we had auto mechanic shop. We had all this other type of stuff. And all that's gotten really taken out of a lot of schools over the, really kind of since the turn of the century. You saw a lot of that kind of fade away a bit. But I do think we're about to see a kind of a renaissance of that coming back. The electricians, there's a need with when you start thinking about the requirements for AI and all the build out that we've got to do. And I was just talking about this, utility companies are going to be spending $1.1 trillion by 2030 to build out, electrical infrastructure. Well, that requires welders and pipe fitters and electricians. There's a need for over 500,000 electricians right now. So there's a huge demand. There's just not there. And what that means is when you have a huge demand for a skill set, that means there's money there.
Exactly.
And, electricians can make, easily, in excess of $100,000, $150,000 is not uncommon. Once you have your master, your master's electrician's license and those type of things. And then not only that, but then you can start your own electrical company to do your own type, start contracting your services out, and then you can make even more money. So, and I thought it was interesting. Can you pull that chart back up for me real quick? What I thought was really interesting, because there's one job on here that they say is almost, that has the least likely odds of being replaced by AI. Well, dermatologist is number one. If you're a dermatologist with all the skin cancer we have, you're pretty safe. AI is not going to replace that yet. But door-to-door salesman. The guy that wrote this has to be older than me, because the guy that wrote this article and did this survey has to be older than me as a boomer, because I don't remember the last time that I had a door-to-door salesman come to my door that I didn't run off with a shotgun. So
well, that's it. So yeah, the most recent folks we've had knocking on our door are folks trying to sell us solar panels and windows. Had that.
I did that when I was in college. I sold aluminum siding door to door.
Did you?
Yeah. I never sold a damn thing.
I was going to say, that would be a tough sell. Hey, your home's made out of brick. But
I don't know to this day who actually buys aluminum siding for their house. But I did that for 2 summers, never sold one. So
it's like, that brick looks really great. How
so
do you think about aluminum siding?
Just apparently I suck as an aluminum siding salesman. So
well, so thinking about going through the list, right?
Yeah.
The list of these jobs with AI. So something else I've been telling, our daughters, but also look, as when the individuals and families that we serve here at the firm, there are a lot of sons and daughters that our clients trust for us to visit with as well, to give them some guidance as they're coming up through school. What do they want to focus on? You were talking a little bit about 401ks, how do they work, et cetera. Something else I like to tell folks is, as you're thinking about getting into that career after school, start thinking about, okay, well, will this be something that will survive in good economic times? What if we get into some more volatile or uncertain economic times? Is there going to be a demand for what I want to do, right? How sustainable is that in good times and bad times, right?
No, that's right.
Yeah.
And again, this is so and the reason we're starting with this part about as you're thinking about going to school, and I have this conversation on a regular basis with my son and my daughter, who they're all in college right now, and my son is wrestling. He's a computer science engineer, and he's like my worry is that when I graduate, the need for coding is not going to be there, because AI can do it already. I'm so I'm like, well, you don't have to worry so much about being that, but how will you work with AI in terms of your profession? So where do you need to find that niche? And so that's what we're working through with him right now. But it's a challenge. But there's another side of this, is that once you graduate and you get your first job, there's kind of 3 pillars that you need to be thinking about as you go to work. And John and I will discuss grit, grind, and glam when we come back from the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security, and how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV TV starting August the 4th will be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
Are you a financial advisor sneaking peeks at our stuff? Instead of trying to do it all yourself, why not just join the team at RIA Advisors? Our full-service organization can provide you with the support, unparalleled research, and tools for managing your clients' money and honoring the fiduciary pledge of putting clients' best interest first. Don't take our word for it. Talk to the advisors that work with us. Want to come win with us? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors, big enough where it matters, agile enough when it counts.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
If Lance dressed up like Danny, maybe his wife would listen to him. No, that is not the case in my household. I actually had this conversation.
She wouldn't listen to him anyway.
The Real Investment Show podcast.
I had this conversation with my wife yesterday. I told her no on something she wanted to do, and she goes, "I'm sorry, I think I misunderstood what you said."
Same show, your schedule.
You meant, yes, you could do that, right? And I was like, "Yes, honey, that's what I meant." So, yeah, she goes, "I'm going to do what I want to do." I'm like, "Okay."
All right, love you. See you.
Exactly.
At realinvestmentadvice.com.
I could wear a tuxedo, and she is not going to listen to what I have to say.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
If you're working and looking to retire soon, a Medicare special enrollment period is in your future. Understanding Medicare choices, enrollment deadlines, and costs are essential to your overall standard of living in retirement. The wrong choices can cost you thousands in penalties. Make sense of Medicare's alphabet soup with RIA Advisors online resources and one-on-one partners to help secure the healthcare insurance choice that is right for your lifestyle and budget and avoid gaps in coverage. Click on the insurance tab at realinvestmentadvice.com today. realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Just real quick, a reminder to be sure and like and subscribe to this channel because as of next week, starting on Monday, we will be all digital only. So we're coming off the radio and we'll be all digital here on YouTube, live on X, live on Facebook/Meta, also working on live on TikTok. So we've got a variety of outlets for you to tune into. Of course, all of our podcasts that we also produce will be there for you. Your favorite podcast channels, whether it's Apple, iTunes, or Spotify, you'll be able to find the show. But we will be all digital. But the best place to subscribe to right now is either subscribe to us on X, follow me on X at Lance Roberts, because we'll stream live there. Also, be sure and like and subscribe to us right here on YouTube as well, and that way you also get notified when we go live. But we had a question in chat about, will the show still be at 6 in the morning? Yes, we're still going to do this show at the same time because we want to have the show out before the market starts. So that way you get our before the bell commentary. If there's something going on that's moving the markets, if we're having some big event, we want to make sure and have new, kind of that analysis in your hands before the market opens for the trading day. So yes, the show will be at the same time. But we will be doing some live interviews as well. But because people don't want to be interviewed at 6 a.m. in the morning if they live in California where it's 4 a.m., we will be recording some live interviews for you and then running them at 6 a.m. in the morning. So so we will also be bringing in some guests. We'll be having some other conversations to kind of expand the show. A lot of things that we're going to do to improve the show and the information, the quality that we bring to you as well. So lots of good innovations coming, but make sure and like and subscribe to the channel. That helps us. And the more subscribers we have, the easier it is for us to get bigger names to interview, because that's what they're looking for, right? So help us out, like and subscribe to the channel. We appreciate it very much. So just talking a little bit about careers and again, so you're in college, you're getting ready to graduate college, and when you go out into the real world, it's not what a lot of people make it out to be. It's not this big kind of glamorous thing. When you go get your first job, and we all have these aspirations, and you're going to work in a corner office, and because we all watch the television shows, right? So we all watch Suits, right? and so we all kind of have this expectation. I'm going to work in this higher. I did, right? I thought, it's
Sure.
like, when I got there, I'm going to work in this, and I'm in finance. I'm going to, be working this, high rise downtown and with glass windows. It's going to be awesome. Yeah, I've worked in a dungeon for about 3 years.
And I shared an office. There were 2 desks. We were butted up next to each other. You could hear each other's conversations. It was like, I'll go sit out in the hallway. I'm actually have a little bit more privacy out there. So where was the corner office with all the wonderful views? I didn't have that either.
Yeah. So, but it's always interesting, and particularly just from things that we see. But I think there's a couple of things that as you go get your first job, or if you're in your first job right now, a couple of things to kind of think about. And one is be careful with job hopping. We interview a lot of people to come work for our firm. And the one thing that we look at more so than anything else is how fast you're hopping jobs. And the reason that's important is that we spend a lot of money, time, and effort to train somebody. So if we hire you, no matter what your skill set is, we're going to spend a lot of time, money, and effort to train you. And so we need to make sure that you're going to stay with us long enough to recoup that investment that we're going to make in you. Because we'll pay for your education, we'll pay for certifications, whatever it is that you need to do that we need you to have. We'll help you do that. We'll pay for that. But if we're going to make that investment, we need to make sure you're going to be here. And if your resume is a lot of 1 year stint here, 1 year stint there, that's going to impair you. And I get it when you're young, right? It's like, I don't like this job, I'm going to quit and go somewhere else. Just be real careful with that. Because again, that kind of track record makes employers a little bit more reticent about hiring you because they know what the cost is going in to hire you. They got to provide you space, they've got to provide benefits, they've got to do all these other things. And so if there's a risk because of your resume that you're doing a lot of job hopping, it's gonna impair you from getting a job. So try to stay. Look, I'm not saying you shouldn't change jobs. You should change jobs from time to time, right? You work for a company for 5, 6, 7 years. You build a good skill set. Now you're ready to go out, right? And go get a better job. But just be careful hopping jobs early in life a whole lot of times because that will kind of impair you a bit.
Yeah, there's a difference between job hopping and making a transition to something else when the time is right. And so I've worked with a couple of different employers over my career history, and it's just amazing how you look at your path and how you kind of end up where you're like, okay, this is absolutely the right fit, right? Mm-hmm. But along the way, to your point, Lance, you can build up that skill set, and too through the various employers that you work with, you start to develop relationships. Right. And you get to know folks, and, it's amazing how your career can also blossom, not from just your skill set, but also from those relationships that you develop over time. Mm-hmm. Right. So, but if you're kind of new to school or freshly out of school, kind of starting your first job, if you're kind of hopping around, if it's very clear on your resume that you've got started at this employer, then 6 months later you're over here, and then another 6 months you're over here, and another 6 months you're over here. That's typically a red flag for somebody that you're interviewing with. So you want to show that you have more tenure and more loyalty, and that you really want to work and develop your career.
Yeah, there's a really good article in Time Magazine. That was kind of discussing about this, is that when you think about your career in particular, you want to think like John was just saying, you want to think more long term, and just like investing, just like anything else, is, we can try to make shortcuts and do those type of things. And typically those don't work out well. But if you'll start kind of looking at your career path on a longer term basis and making good decisions, that'll help. And so this was, kind of the way that Time Magazine laid this out was they said, think long term, build endurance and pace your growth over years, not by trying to race through early wins. And in order to do that, embrace 3 pillars. One is called grit, which is just being, have passion for what you're doing, persevere. And look, when you go get a job, it's not this glamorous thing that we all kind of have this idea of what we saw on television, working for a company is going to be like. It's a lot of crap. You got to get up every day. You got to go to work. You've got to, put up with, people you work with. You've got to take directions from the boss. It's not the glamorous thing that a lot of times it's made out to be. In a lot of cases, it's very hard work. It doesn't mean you're not going to love what you do, but in a lot of cases, early on, you're the new guy in the company, right? You're the bottom of the list. You're going to get all the grunt work, and it's going to kind of be miserable. But this is where you've got to just persevere through that, because 2 things are happening at this stage of your career. One is that the people higher up in the company are evaluating you. And I'll tell you this, we have 2 interns that we hired this summer. These kids are fantastic.
Phenomenal.
They are absolutely phenomenal. They come in every day. They're here. They show up to work before everybody else does, and they are quick. They are efficient. They take whatever job they're given and they do it to the best of their ability. And that's what we as employers are looking for. Right, that's the type of thing we're looking for. If you're showing up to work in flip flops and and you're kind of lattes and lounging around a lot in the office and not taking you a long time to get jobs done, that's not what we're looking for. We're looking for the guys that have grit. And this is every company. It's not just us. This is just every company, because everybody in we just hired a new employee just last week. And I was interviewing her, and I told her, I said, look, you don't have to worry about me as your boss. I said, all of our employees here, they work very, very hard, and we're very busy. And if you're not pulling your weight, they will run you off. And it's a true statement.
Tough love.
It is a bit of tough love. And so you've got to be able and be willing to do kind of the crap work and persevere through that, because that's what you're being evaluated on. John?
Yeah, and sometimes it's things that you don't think that people notice, but they do, right? So just like the 2, like the interns that you were talking about, that we are very fortunate to have on the team here this summer. So we're in here. So the show this morning starts at 6:06 Central AM, right? And by the time we're done, they're already out here at their desk, ready, right? And the folks that they are. Anywhere when you're driving in Houston or surrounding Houston areas, there's always traffic. There's always issues. And I've never heard them complain once about traffic. They are always
they're driving
time.
an hour to work every day.
There's one who's driving over an hour and a half to get here.
Yeah.
Right? Both ways.
Yep.
Not one complaint.
Yep.
Right? And you're talking about that grit, right? So I don't know if I've ever, how can I say this? I don't know if there's a perfect job out there. I will say I feel very blessed now in my career. What I do, this does not feel like work to me. This is part of my life. Mm. And that is a wonderful thing to be able to say, right?
It only took you how long to get here, though?
But I'll be 51 this year, right?
Yeah.
So it takes a while to kind of find that space where you're like, man, this is, you feel so fortunate. But you got to get your start somewhere. And so that grit is, getting in there and working through it, and you got to be able to take constructive feedback and criticism along the way too. You can't let, because you're judged and you receive positive and negative criticism every day. You got to be open to it because you learn from it.
As Time says, stick through setbacks, stay committed, believe effort matters more than innate talent. And we'll come back. We'll talk about talent over effort right here on Two Dads on Money. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Will Social Security be there for you when you're ready to retire? Richard Rosso and Jonathan Penn host our next Candid Coffee on Savvy Social Security Planning, Saturday, August 23rd. When should you apply for Social Security? And how much should you expect to receive? Register today for Savvy Social Security Planning, Saturday, August 23rd. Candid Coffee with Rosso and Penn at realinvestmentadvice.com. realinvestmentadvice.com.
This is Lance Roberts with some exciting news. If you've been tuning into us every morning right here on KSEV, starting August the 4th, we'll be exclusively digital on YouTube. So make sure that you like and subscribe our channel at YouTube. It's The Real Investment Show on YouTube, also streaming live on X. Just search The Real Investment Show on YouTube and hit subscribe. Starting August the 4th, we'll be exclusively digital. Get daily market insights, interviews, financial truth, anytime, anywhere. We'll see you there.
The Real Investment Show.
RIA Advisors Research is the envy of the industry. Our economic insights are featured on advisorperspectives.com, Fox Business, and MarketWatch. RIA provides advisors with marketing and back office support, objective research, and holistic, cutting-edge financial planning tools to meet your clients' needs. Want to join a winning team and be part of a fiduciary culture where you can do your best work? Then why haven't you contacted us yet? Go to our confidential advisor hub at realinvestmentadvice.com. RIA Advisors. Big enough where it matters, agile enough when it counts.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors. 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
So just talking about this Time Magazine article about your first career and as you're starting your career, getting out of college, starting your career, and kind of the three pillars to be thinking about. One was grit. We were just talking about that a second ago. The other two are grind and glam. The grind part is also kind of falls in line with the grit. And again, that's the showing up, doing the work. You're going to have setbacks. You're going to have delays. You're going to have people admonish you for your work, right? You're going to have people stab you in the back at work. That's just part of the deal. That's just office politics. And so the goal is you've got to kind of, just work through that. But what's going to make you stand out is the hard work and to find the value in hard work, working the late nights, working overtime, getting the job done. And again, just using our business as an example, you email me any time of the day, unless I'm actually just sleeping, which is almost a rarity, I will answer you back within a few minutes. So my day does not start at 8 in the morning and end at 5 in the afternoon. My day goes till 8, 9, 10 at night, usually starts at 5 in the morning. And I'm answering emails and taking questions. And that includes Saturdays and Sundays. You email me on a Saturday, you email me on a Sunday, I'm going to respond back to you because I'm constantly monitoring these type of things because that's my job, right? And that goes for everybody that works in our office. They all work more than 40 hours a week, and because that's kind of what the job requires. And they don't complain about it. They don't fight about it because they are compensated well if the company does well. And so there's bonuses and opportunities for them if the company is doing well. So they are incented to put in that extra time. And so you have to think about that. But also too, part of that, working the late hours and those type of things is they actually find value in their work. They love helping our clients. They love helping, bringing on new clients. They love talking to the clients. They build relationships with our clients. And so they find value and meaning in that grind. So yeah, we put in a lot of hours, we put in a lot of time. And this is every company. This is not just ours. This is the way it is with every company. You're going to work long hours. It's going to require overtime for you to excel at your work, but try to find value and meaning in the work that you're doing.
Yeah, I agree. Just for me personally, I just love when all of us here, we all like to teach and we all like to educate. And when I can visit with somebody, whether if it's a couple, an individual, business owner, younger investor, more mature, older investor, where they go, yeah, John, that makes sense. I got it. Nobody's ever explained it to me like that before. Now that makes sense. That now I completely understand. I feel like I'm really trying to help and add value, right? So so whatever that value is, whatever career or specialty or area of focus that you're going into, what is that value? What is the passion that keeps you going? And there was a great comment in our chat during the break, and where somebody mentioned, hey, maybe if you want to have value or happy, maybe you go into business for yourself. You work. Mm-hmm. You are a business owner, self-employed individual.
Which now your work day just went to 100 hours a week.
All right. So long hours either way, right? But there are many folks that many clients that I work with who are business owners, self-employed. They dictate their own schedules, but they also, it's their life. It's not, so like when folks ask me, hey, John, what are your hours? My response is yes. They are what they are. They are until we get things done, and we know that folks are taken care of. And it's the same way with small business owners that I work with, restaurant owners, retail owners, medical device manufacturers. It never turns off. Right.
But that's what I'm saying is like you have to pursue, and this is the third pillar of which they call Glam, which is to find value in the work that you're doing. And to find passion in it, and again, look, early in your career, that's going to be very difficult. If you're just graduating college, again, your first job out there, it's going to be a lot of grunt work. It's going to be a lot of, the jobs that nobody else wants. You're going to get those jobs, but you got to get through that part and then start finding, some value in the work that you're doing and find the passion for it. And if you can do that, it makes the grind more worthwhile, right? If you're just grinding for the sake of grinding and you hate your job, you need to think about a different job or a different career. Maybe that career is not right for you. And you're never going to be happy. If you're in a job that you can absolutely find no passion or value in, you're never going to be happy. And, so you've got to start kind of reevaluating where you are. And it's like, yeah, but I went to college and I got this degree and whatever. A lot of people go to college and get degrees in something that their careers are not in. Their career does something entirely different. My goal when I went to college was to work for Coca-Cola. That's all I wanted to do. I wanted to work for Coca-Cola. Never got there, right? And I'm in the investment advisory business now, and that was never on my radar. But this is what I love to do, right? And I found out I had a knack for it. So that's and this is a really important key. Talent is one thing. And if you've got talent, that's great. But if you have a really bad work ethic, talent's not going to matter. Hard work will beat talent every day of the week. And you don't have to be the most talented guy in the office. You don't have to be the guy that just knows everything. But you show up every day with hard work and just a modicum of skill, you'll do fine. And you'll be able to build a career. And again, you want to try to find, look, and there's an old saying, right, is that if you find something that you love doing, you'll never work a day in your life, which is where everybody in our firm is, because we all love what we do and we love it very much. And so we really don't work here, right? We're just really doing the things that we enjoy, except maybe for Danny, but who has no skill. But I'm joking.
Definitely tune into the show tomorrow morning. I'm going to have my popcorn ready.
But no, seriously, we all love what we do very much. So nobody really works here at our office. It's just we're doing what we love to do. And you've got to eventually find that. But it's going to be very tough to find that right out of college because you're just trying to build your basic skill set, get that resume built, get some skills behind you. And again, that first job out of college, that's your benchmark that everybody else is going to evaluate you on. So when you go from that job to the next job, and this is why this goes back to job hopping and other stuff, is that what you do in that first job, you may hate it, but stay there in that first job at least for 3 or 4 years and grind through it, build a base so that when you go to that next job, that's what that next employer is going to look at is how did you do in that previous job when they call to get a reference? Oh yeah, he was a terrible guy. He never showed up at work on time. He was always late, those type of things. You don't want that type of a reference, right? Really work to build that first few years build a good solid base, and then you can really start to find companies that fit more of your passion.
Yeah. So if you make that transition, one key word of advice: don't ever burn a bridge. Right.
Yeah.
Because if you do decide to leave your current employer and you make that transition to somebody else, there's a way where you can do that, where when you leave your existing employer, you can do it amicably, where the goal is you want your current employer to say, hey, John, if your new endeavor doesn't work out, please know that you can call us. You're welcome here anytime. Right. Or just don't burn bridges. The world is very small.
Yeah.
And you never know who you maybe worked with in the past and where you go to work next or whatever you might do. There could be some folk, you just never know. So just, don't ever burn a bridge if you're moving from one employer to the next.
Exactly. It's not just don't burn the bridge with your employers, don't burn your bridges with your coworkers.
Exactly.
Because again, John's a really good example of this. John worked at Schwab with two of my partners, and it was those relationships that he had with them that we went chasing after John to bring him here because of his skill set. But it was that relationship with our employees. You don't never know where your coworker next to you may despise the guy or gal sitting next to you, right? But they go get a job at another company and they're needing somebody, and you want to be the first person that they think about. It's like, oh yeah, I know a guy or person that would be great for this role. And that network is very important. So, even though if you don't like somebody, don't burn those bridges, because you never know in the future when you're going to need that person.
Yeah. So it kind of comes down to that relationship point that I was talking about earlier, right? Is, you're kind of getting out there and you're starting your career. Again, focus on what you can control, but at the same time, start to network and build those relationships around you. And because then later down the road in your career, you never know when an opportunity may come up where you get a phone call and say, hey, how happy are you with your current employer, your current role? Hey, are you running your own business, whatever that might be? Hey, I'm looking for somebody like you. Let's talk a little bit.
Yep.
You just never know when something like that might materialize.
No, that's right. I was just looking and kind of watching, kind of paying attention to chat we're doing, and like one person's talking about his career, which is medical device sales.
Yeah,
that is an awesome career. It is absolutely great. It is a lot of hard work. It's a lot of travel, but it pays very well. And guess what? It is also not real susceptible to AI. So, because there again, there are some jobs, and sales is going to be one of those. Just no matter how good AI gets, there is still the need for human connection, particularly when it comes to buying or selling a product. And if I need something, AI is fantastic to learn about a product, but at the end of the day, I really want to talk to somebody about that product so I can ask questions, see their reaction, shake hands. There's still a value that exists with that human connection, and sales is one of those things that are going to be more solid against the invention or the kind of the advancement of AI. Human sales is going to be one of those things that is more defensive against that. So just something to think about. And again, sell the right product. You can actually earn a very, very good living. So medical device sales is one of those.
Yep.
So anyway, all right. Thanks for joining us today. We'll be back tomorrow with Danny Ratliff. And look, our interns just showed up here as the show's ending.
6:59
here. That's what I'm saying. Grit, grind, and glam. Right? Just think about that. And if you have any questions, get by the website, realinvestmentadvice.com. Always happy to help you. And of course, get our latest updates and more on the website, realinvestmentadvice.com. Make sure and like and subscribe to the channel so that you get notified next week when we go all digital as well. See you then.